Alright folks, Scott here, and this is the wrap for Friday, October 25th. So, another bullish day here, a remarkable hold of the trend line. In fact, I drew a trend line in our trading room today using just this, and where was it? It held pretty darn rock solid all day. What I want to show you going into Monday is the results of fading gaps after at least a 100-day high close on the preceding Friday. So Friday closed at a 100-day high close. What happens on Monday? Actually, let me show you a daily chart just so you see. Way up here, what a market. And there you go, about 50-50 in terms of which way it gaps on Monday. Maybe a little bit of a bias there. I say maybe, and it's clearly one shown there, but a bias implies sample size and has a statistical nature to it, or inference in my mind. And with only 44 trades, roughly 20, 25 each way, not quite strong enough for me to bet the farm or even anything close. But historically has gapped down a little bit more frequently than gapping up in the subsequent day. Both, however, have been pretty good trades using an end-of-day stop. The average winner, a little bit bigger, actually about a third bigger to the upside. That's what a short trade is, versus a down trade using, this is an end-of-day stop, by the way, average losing trade. I was going to say using MTG stop parameters because we're normally using 5 or 6 points. Check my settings. Yeah, those are my settings to represent an end-of-day stop. And that's what it has. So pretty rare to lose a bunch of money on this trade. One big loser on the downside, but that's it. Biggest loser on the upside has only been about 6 points. So pretty solid setup. The market is stretched due to pause is the way I interpret that. And we'll see, right? You don't want to, again, get too aggressive in that thinking, but more times than not, that's what's happened in the past. All right, and as always, I'll rerun these numbers for our members on Monday morning using our MTG stop parameters just to confirm if both of these directions are indeed tradable. And what I mean by that, sometimes you'll have good numbers just fall apart when you include a reasonable intraday or volatility adjusted stop like we use here at Master the Gap. We use 30% of the 5-day ATR, minimum of 5 points and maximum of 12, and when I apply that, could make these numbers change sometimes quite a bit. Most of the time not, but sometimes it can. So I save that additional research for our members. Anyhow, a little food for thought. Looks like we should get some consolidation, at least in the morning. All right, of course, anything could happen on the weekends. We'll see, but that's what the data shows. Let's look at what we showed going into today. So we traded overnight down quite a bit, and those rallied. We were in good zones, rallied and filled the gaps. And then we gapped up around the highs of yesterday in most indices, and that was actually a very strong setup. You don't get numbers much better than that on such a large sample size applied across all 8 indices. So 66% win rate using our MTG stop parameters and a prop factor of almost 1.8. That means it's generated almost 80% more in profits than losses. That is strong, and you can guarantee I'm going to be trading something like that. The question is what position size, and it was supported by gapping up, but not above the highs, but between the high and the close. That area, which is generally the UHC zone after an up, or is the UHC zone after an up day, was even stronger numbers. Now note the odds for extended target were actually weaker, so the smaller the gap, a little bit counterintuitive, but the smaller the gap actually had worse odds for trading through the gap. And the way I think about it is generally because the small gaps don't have as much momentum when they start filling, nor do they have as many people shorting them at the open, where a large gap, correction, they don't have as many people going long at, let me think about this. I take that back. I'm going to confuse you and myself here. Let me just say it this way. Smaller gaps often have a very good chance of hitting an extended target, but sometimes not. So when the market's real bullish and you still get a gap up, you just don't have as much juice to drive it down. You're more likely to get buyers stepping up a gap fill continuing higher versus a bigger gap that once it starts filling is going to have greater momentum to the downside and may continue through gap fill and beyond. So subtlety there, but bottom line is this was part of my decision making today. I'll show you the gap guide super quickly just so you can see these numbers. Look how good these numbers were. So the weighted average, what I just showed you was the worksheet averaging these numbers in these different areas. You see how strong these numbers are, really strong across the board with few exceptions. Looking at the ETFs, check, check. You know, some of these UHC zones were not quite as strong. Check in the Qs, check. So this was pretty much a no-brainer fade for me once we rallied into them. It was just a matter of position size, which is essentially what I said here. The other research I had was all favorable for up gaps, really strong numbers for shorting up gaps historically. So the guides were basically attractive. The unique patterns were favored for up gaps. Only conservative closing variance, that was for a down gap, so that wasn't in place. So I said if the ES opens up with at least 1 point of opportunity greater than 1749.50, then I'll use a slightly reduced position size and fade the gap. And I used 75% position size today, in part because it wasn't clear which zone we were going to open in. That added a little bit of risk, and the ratio of potential profit to loss, I wasn't sure where it was going to be. So, I do the best I can typing up what my plan is as accurately as I can 10 minutes, well, more than 10 minutes before the open, posting it right around 10 minutes before the open. That's what I wrote. I share more detailed numbers in our trading room, for obvious reasons, because I know more, and I make some trade adjustments. In fact, I did today, and darn if it didn't cost me a little bit today too, because I had a good plan. But let me show you. I still made money. Get these all set up. Russell, NASDAQ, Dow, and the S&P. So it shorted the open. I was filled at 1750. My first target was 1748.50. That's this blue line right there. You see how the futures rallied in the prior day? The white line represents the session day change, right, to October 25th. Look how we rallied that last. There was a couple points there at the end of the day. So for the ETFs to fill, they had to go all the way down to 1746.75, correction, which is exactly where they went. And what I mean by that, all you got to do is take your cursor, put it over the 1600 bar, which is right there. Scroll down about a third of the way, you see the close of yesterday's bar was 1746.75. It's in green there, about a third down from the top. And you can see it finally got hit over here around lunchtime precisely. So if I went for, even though we opened right at the prior day high, so I decided to hedge a little bit. Primary target was gap fill. That's what I would use for my proximity rule to trigger my trade management rules. I went half for 1748.50, half for 1747. Problem was, I tightened my stop after it came down here and missed me by 2 ticks, not once but twice. It's hard to see, but right there went to 1747.50, and I rode it all the way up here to test the open. It came back down. At that point, there was no way I was going to hold on to it further. Tightened my stop to basically right at entry, and got stopped for scratch at the on the second half, making a 1.5 on the first. Of course, right over there, rolled over, went precisely to my target. I went through it 1 tick and then bounced. But this was the action I was a little bit concerned about. These small gaps on real bullish days, they sort of struggled to make much headway up or down, and then after they filled, they'll often bounce, which is essentially what happened. Again, could not have predicted that was going to happen during lunchtime. But it does show you the pitfalls of trade management, I guess, if you want to think of it that way. Some folks in our trading room, quite a few, did hold on to it and get the full target. Let me see if I can show you some of that. Well, I couldn't. I'd already shut down the room. I forgot I'd shut it down. But one of the members sent this to me. I'm not going to disclose his real name or email without his permission, but I think this email is pretty telling. And he's a very experienced trader. He's been trading about 20 years. And he's gone through some very tough personal times. Just had his 5th child, which is a joy and a blessing. But just a week or so prior to that, he had a daughter, I think she's 14 years old, that almost died. from an infection in her lungs, or I forget the exact cause of it, but bottom line is very, very close, very scary. She's recovered, everything's great, but he's just had an unbelievable couple of weeks. And look what he posted in the room today. He got out of gap trade plus 3.25, and he was going for the exact same target I was at 1747. I guess he was filled right at the open at 1750 and a quarter. I was filled at 1750, and he got out half a plus. Oh, correction, he said right here 3/8 at 1 1/4, 5/8 plus 3 1/4. Average 2.5 points on a full size position. Nice way to end a good week of trading. Now he's not bragging there. What he's doing is sharing this. Check this out. Learn something interesting about having a written plan. You can trade even when crazy stuff is going on in your life. The main difference for me is I haven't watched the market during the day, so I had to just set the stops and targets and let them do the thing. And frankly, I've had a much better month than usual. Isn't that fascinating? This guy's been trading 20 years. Part of that is because the setups have been good, but I think part of it is that I took out all the discretionary decisions. So good lesson to learn, though I wouldn't want to learn again for the reasons he has this month. So he certainly wasn't sharing, he wasn't bragging to me. He's a savvy guy, and I know he was reminding me that he's noticed I've had a tough time with some of my discretionary decisions of late. And there's no doubt, I don't not have a big edge there, but they do protect me psychologically. I may not have much of an edge at all. I've said before, my trade management costs me a little bit of money, but it's my decision. It helps me trade the appropriate position size and stick with my plan through good times and bad, because it allows me to minimize risk on some of these near wins that reverse. And it's such a bullish market, I'm not real trusting of the upside. Shorting up gaps, as we've seen all year, has been tough, and then it could have happened today. I could have gotten stopped out on a full loss, depending upon how I did my target. So I don't have any regrets, but I thought it was a fascinating post about the importance of a written trading plan and the value it provides when life is crazy for you. So sorry for that digression. I just thought it was too good not to share with you. Let's see. So I ended up with a small win. Some folks ended up with a much larger win, and the 15-minute nor the first hour range guides really showed anything that was clear. So I had no trades today. Unfortunately, I would have considered a long here as we were breaking above the highs. Pretty common setup, an afternoon break above the highs when you can break through more than 2 points. You can often look for continuation. I unfortunately was tied up on a conference call and missed it. So, but that's neither here nor there. That was today, and we'll see what Monday brings us. So hope everyone has a great week and enjoy the World Series, and we'll see you in a few days. Take care.